Greetings, traders. This is a presentation today on the Boomerang Day Trader rules and methods for my new Ultra Boomerang. It's the same as Boomerang that we've always had, except I've enhanced some of the features on it that I'm going to show you briefly today. But the focus today is going to be a very short webinar. I'm going to record it and put it on the blog, so you'll always have it as a reference, and it's referring to the Boomerang trading rules. Now, we have a previous PDF that we've used for the older Boomerang, but it doesn't apply to this one because it's a little different. First of all, let me go over that with you. And again, if you'd like a copy of this, you can always email me and I can send you a copy of this. First of all, here's the summary of everything right here. We take trades in a new trade channel on a pullback to the signal line with matching colors on the Cobra and the dynamic trend bands. That's it. Now, many of you are unpackaging Boomerang when you buy it and you just throw in a trade on. Don't do that. Follow the rules, please. It'll help you to do a lot better. Let me read that again. We take trades in a new trade channel. We don't take trades anywhere except in the trade channel. It's the only place that we take a trade. We take a trade on a pullback to the signal line only, and I'm going to give you a few tricks here today that are going to really help you with that, with matching colors on the Cobra and dynamic trend bands, but primarily trend band number 1. The idea is that when you do this, in most cases, the prices are going to have crossed over dynamic trend band number 2. On the older Boomerang, we would wait for the rim of the trade channel to cross dynamic trend band number 2 and everything, but with the enhancement of the dynamic trend bands, the use of Cobra, the same exact trade channels, I've added one other feature which I'll show you a little bit later, but this is all you need to do. Take trades on a new trade channel on a pullback signal line with matching colors on the Cobra and the dynamic trend bands. The Cobra will give an advance warning of a new trade channel opening in most cases. So when you see the Cobra change, you say, okay, probably a trade channel coming up. Gives you some time to look at the other configurations on the chart and make sure it's right. Hold for a 3-point gain with a 3-point stop. Now, as you advance and you're learning a Boomerang and you're trading with it and your experimentation, you've been into it for months, some of you years, you've done all kinds of research. I'm going to show you tools today to catch what are called runners. I've added a new feature that catches runners. It's unbelievable. I mean, it's like almost 80% accurate, sometimes 90. It'll have runs on a day where every single crossover the dynamic trend band will create what I call is a surge. All you got to do is know where to get in on the surge, and I'll show you exactly how to do that today. But other than that, it's just the old, what I call routine of old routine of blue-collar workers. We go to work. This makes trading a lot. It's called boring profits. I used to call it that, and I think it's kind of a nice term because trading is so hyper and exciting, and your brain can get screwed up so easily and everything. You want boring profits, the same old routine day after day. I call it blue-collar work, and it's very respectful because there are many different methods of trading and buying stocks and doing complicated option things. We're futures traders, and I go in and I call myself a blue-collar futures trader worker, and I go in and scalp for the easy gains. I'm looking for the easy money. I don't really want to hold a trade in many cases, but sometimes you'll get setups, and I'll show you some today, where you can hold out for a bigger gain. But generally, this is just our bread and butter blue-collar working rule here. Trades they're always going to be in a new trade channel in line with the bias on a pullback signal line. Just repeat that over and over because that's how Boomerang works. Okay? And again, 3-point gain, 3-point stop. I would say that probably at least 70% of the trades are going to be winners. So this is a very nice configuration to use. The rules are the same as for those of you who own Boomerang. They're the same as before. Avoid fat trade channels that are created by 2 to 4 fast spike candles, one of those candles is usually 3 points or more in length. I'm going to be using NASDAQ as an example today. That applies also if you're trading ES or the any contract pretty much in the U.S. stock indexes, the E-mini Dow, If you're using the Russell 2000, same thing. And then our second rule here, avoid choppy market conditions. This is a special skill you'll develop using Boomerang as your guide and the volume meter. Avoid choppy market conditions by reading the volume meter with ADX and the counter-colored channels and trade channel arrows flipping back and forth. And I've got a new tool for reading choppiness, and that is the tight support resistance lines. And I'll go over all this in a minute. I'm just going over the PDF here. And then the final rule, and you should know all these anyway because they're from the old Boomerang or the previous Boomerang. Do not trade against a steep dynamic trend band. Number 2, when this market's in a channeling mood, don't trade against steep trend band. Wait till it flattens out a little, and you'll know that now with the new Ultra Boomerang when the Cobra and the prices cross over the dynamic trend band number 2. That'll save you the previous method of kind of speculating when the steep or dynamic trend band would stop. Same rules enhanced with the new tools of the support resistance lines, the Cobra, and the re-enhanced dynamic trend bands. So again, if you want a copy of these rules, you can email me at Mohan@DayTradersAction. You can take the rules. We don't mind even if you haven't purchased Boomerang, and go over some of the dynamic trend band charts. I mean the Ultra Boomerang charts like you'll see here. You'll see many examples here on this webinar. So I'm going to keep it real crisp and fast as we move ahead. Now I'm going to go over these rules with you using existing charts. Now first of all, we're only taking trades in the trade channel. See these shaded areas? There's no other trade with Boomerang unless you're me and you have a couple of, like my exhaustion reversal trades, things like that, but that we do exclusively in the room. But this purpose is just for Boomerang. Now, if you are interested in coming into the room and trading along with me, just email me at Mohan@DayTradersAction. And we also have auto-traded the signals if you'd be interested in a little more hands-free type of thing. Now, first of all, let me find, here's a good example. This was some early morning sell-off, and of course, heavy hammering and steep. So let's look at, first of all, at the rules. First of all, notice that the market's moving up. Now, one of the rules in the dynamic trend bands is if they widen out like this, 5 points or more, in this case 64.5, 70.5, this is 5 points or more, you can start watching for a reversal trend. That's another clue that you can use. You're going to see the Cobra right here. In fact, let me switch this over right now to an pointer cursor. I may have to switch back to show some price, but this will make it a little simple. Here's the Cobra right here. Prices are moving up. The DTBs, you notice how they're widening out. Here's the prices getting a little bit exhausted here. You can see hitting exhaustion levels here on bias index number 1, and very much so on bias index. But notice how the histograms here are starting to shrink lower. That's because the internal market force is shrinking. The Cobra crosses here and starts blinking red. That's your first warning. Well, this happened pretty early. Here's a trade channel opening up right here, a pull back the signal line, and the prices immediately went down. Now, this is where I need my cursor to measure that, but I can see there's a 3-point move here. If you held a little longer, then there was a stronger move. Now, you would have noted that with the new trade channel opening after the extended move and the dynamic trend bands widening out. That's usually suggesting a counter move of strength is going to occur. Now, one trick I'd like to show you. First of all, also here's a dynamic trend bands crossing. They crossed right around here. You can usually look for a surge when that happens. If a surge has already occurred, in this case, a large surge, you're probably not going to get as much of one, but you'll get a counter move that you can catch another surge with in most cases. I'll show you that in a second. Now today, because the market was flying so fast and furious, we had a lot of cases where the DTBs would cross and a surge had already occurred. Not to worry, because you just have to follow the rules and catch the Boomerang trades. So, what do you notice down here? First thing, that's right, a steep dynamic trend band. So you got to be a little bit cautious on that and do what? That's right. Wait for the cobra to change color, the prices to cross over the dynamic trend band, the steep dynamic trend band, which they're doing. Well, here they're tapping it, here they're crossing, here they're crossing. Change of the cobra and a new trade channel. Always wait for a new trade channel open. Never before. A new trade channel opens here. Prices are crossing. And this is matching here on dynamic trend band number 1 on the new dynamic trend bands, a lot tighter, a lot faster. Pull back the signal line and a huge surge to the upside. If you didn't have a 3-point gain set up automatically in there like I have, for example, here, I hope that wasn't blocking the chart. I don't think it was. This is all we use here, is the simple chart trader. Buy them, sell them at the market, close them out. Sometimes I reverse them, but most cases buy them, sell them, close them out. That's it. But here you can see if I didn't have a 3-point margin, I have different parameters set up, like 12 and 20, for example. 12 plus 12 twicks minus 20. That's plus 3 points minus 5. So I put that kind of 5 airbag in there in case things get away from us. You don't get slaughtered. If you got to have a stopping. But I'm just theorizing that if you didn't have a 3-point gain in here, this market would have screened 5-6 points higher before you could have even got out. If you had the 3-point target in there, it would have taken it out, but happened so quick, and that's because of the volatility we're getting here. So there's a boomerang trade, and I just showed you how to deal with the steep dynamic trend band, which is one of the rules here. Do not trade against a steep dynamic trend band, and just like I showed you, wait for the cobra and prices to cross over DTB number 2 first. Next example I want to show you is how to avoid a fat channel. In some cases, we got to get one to show up here. Now, first of all, you can see here once again an advance warning here. Now, this was so fast and whipsaw that it's not the good example, but you can see we had the cobra turn red as an advance warning, crossing over dynamic trend band number 1, new trade channel opened, the first pullback, the signal line, got hit right to the downside for 3 points very quickly. And I've got another chart I'm going to show you in a minute that goes back to earlier days before these last 5-6 sessions of madness that we've been seeing. Here's an example of a runaway market that never even pulled back the signal line. It just was so fast. You had an advance warning of the new trade channel with the cobra here. This is called the cobra line. But they never pulled back signal line, so no trade here. Now look at this. Dynamic trend bands crossed, surge to the upside. Dynamic trend bands crossed, surge to the downside. This is the key to catching bigger moves after you get used to our core method. Before you try to become an expert on catching big moves, just get really good at using our core method that I showed you here on the PDF today, and you'll be very happy that you did. Again, advance warning with the cobra changing color, dynamic trend band number 1 changing color, get ready, a new channel opens, and a pullback signal line, and down they go. Now again, if you were expecting a stronger move, and you had some things you were watching, including our change of all red colors here on the bias indexes, and you saw this crossover, you might have had the gumption to trade a pullback or a larger move. Now I'm going to show you within this area here, I'm going to show you 2 tricks, if you will, that I use. I don't like to call them necessarily tricks, but they are in a sense. And that is this. Take note of this. It's very, very important. When a new channel opens, your best trades are going to be when the first or second pullback to the signal line comes within 3, maybe 4 candles after the trade channel candle. Here's the trade channel candle opening. Candle 1, 2, boom. There it is. Usually your best trades when these pullback to the signal lines occur as close to the trade channel as possible. The measure I use is I see the trade channel open. I go, okay, 1, 2, 3, boom. Somewhere in there I want to get short. Now, if you did that on this one, for example, and they pulled back, and you go, oh man, look at this trade taking off, and look at the dynamic trend bands crossing. Well, here comes Cobra to the rescue. You know you're going to get a surge. You didn't have much of a pre-surge before the crossover. Trade the pullback to the Cobra right here, and kablam, down they go. Yes, later you get another pullback here. That was about it. Didn't quite make it, actually. But that just goes to show you how you can use a Cobra to trade pullbacks to the signal line, or trade pullback to the Cobra after there's been a crossover and not a really extended move. That's one of the tricks. So the first two tricks I showed you there, and it's all you got to know. Try to look, though the best trade, here's what it means. The best trades are going to occur within 3 to 4 candles of the channel. And I'll show you examples of that later. Number 2, if they take off and you get your 3 points and you see the crossover coming in right away, you go, wow, there's more to this move, and you're really convinced of that. You see that they haven't gotten exhausted here yet. Trade a pullback to the Cobra and make another 3 points or more. Here's a good example of a steep, very steep dynamic trend band. Yes, the Cobra chains and the dynamic trend band blinked on and off, but this is very steep. Prices moved over here, but notice how as soon as the prices crossed over here, the red candle came right back on. They were right back on the downside. The way you'd be looking for a new counter trade would be to see a green Cobra. Remember the rule. I'm going to show you on the PDF. Just remember, I'm showing you the rules. Wait for the Cobra and prices to cross over the DTB. Now, prices means candles, in this case, a green candle's crossing over and a green Cobra crossing over. There was, notice the prices crossed with a green candle. There is no Cobra crossover. Before it could, they were back down on the downside with all the colors matching. And one of the rules, too, is if you see all 3 of the dynamic trend bands and the Cobra all matching color, you can usually take that next pullback, the signal line in that direction, which in this case would be on this yellow dot, and grab another 3 points. So you see in this one move what we did, and again, this is all going to be recorded, so you'll be able to refer back to it. Don't worry about it. New trade channel, trade within 3 candles of the trade channel, 3 points sell off. You notice the crossover of the dynamic trend bands. Trade a pullback to the Cobra for more action on the downside. Avoid, because you got a real steep channel, avoid trying to catch a counter move here. Why? Because they have not seen the Cobra cross over yet with a green color. That's what saved you. Yes, you had green here, but you got to look for that Cobra and prices to be green candles crossing over. I'll show you in a minute where that does happen. And then with them reverting back to the downside, this is where you often get all 3 of the colors matching. Take that next signal to the, if it's within what? That's right, 3 candles of the new channel. New channel here, 1, 2, 3. Boom, take it right there in the signal line, and a fastest 3 points you ever saw in your life. Now what's happening here is what I call a shift in the center of gravity, which means the Cobra is crossing over the dynamic trend band number 2, but it's matching the color and the slope. But now we get the shift in gravity is trying to take place to the upside for a counter move. Well, what happened here is a green candle screamed higher. You can see it's at least a 3-point candle. This is going to create a fat trade channel. 1, 2, 3. See these prices screaming higher. Don't take this trade, because what happened is it's simply it's too much. It's too hyper here. Leave it alone. We'll just let the market settle. But this is called a shift in gravity here. Notice the dynamic trend band number 1 is cross number 2. And even though they're back here matching colors and everything, the shift is occurring for an upside reversal move. Now, one may ask, well, what about here? A new trade channel opened. The colors all matched. And a pullback signal line. Well, now you're getting this stuff. There's a trade here too, but a much higher risk trade because the center of gravity has changed. You're probably better to wait for the right long-sided trade on the next side. Here they go. Bam. They did hit the trade signal line here on a new trade channel within 3 candles. Down they go, fast as lightning. You'd had a 3 to 5 point move as fast as lightning. Now watch this. Now I don't remember where we are in this chart today. It was a very extensive chart, but remember I said we had a shift of gravity. Notice how the DTBs have crossed and the Cobra has crossed, and now the Cobra is once again crossing here, try to establish a shift in gravity. We have Cobra blinking on and off. We got a new trade channel. We got dynamic trend band 2 and 1 of both match colors, so that's a sign to go ahead and take the trade. If these two match, generally you're going to see about 80% of the time the trade signals, the new trade channel in that direction with a pullback signal line is going to work beautiful, and it did. Here would be your pullback here or here within what? 3 candles of the new trade channel. That's right, and all 3 of the new candles hit the signal line, and they screamed higher within a millisecond, and you had another winning trade there. Now, even though there was a shift in gravity, and I had mentioned a second ago, without looking, I'm now seeing this chart here, that there was going to be a shift in gravity and price were going to try to move up. It was all just hyper whipsaw on the upside, and sure enough, they couldn't pull it off. It was too bearish today. They just could not pull it off. So here they go to the downside. Here they go to the downside again. So what happens? They're spiking up, and you can see they're flattening here. Now let me show you another trick for choppy markets here. And I got another chart I'll show in a minute. That's a different version of Ultra Boomerang. Notice how prices are trading kind of around. This is called the support resistance line here. It's dynamic. It changes colors. It moves. There's actually 2 of them. I just got one showing here in our room chart to keep it as uncluttered as possible. Same with the rim of the trade channel here. I'm not using the white line anymore, and we actually have a colored bias line on the slow line of the rim of the trade channel, which I'll show you in a second. But notice what happened here. Blinking Cobra here. New trade channel opens up. We didn't have much warning here, but we had the Cobra shift and the dynamic trend band number 1 shift colors very quickly. And what else? That's right. New trade channel, 3 candles. 1, 2, 3. This is actually the 3rd candle here of the new trade channel. Pullback signal line marked clearly and instantly on this yellow dot. Another fast move to the downside. Now you might not have taken this one because of the gravity shift and the whipsaw here. It might not have been crystal clear, but it was a boomerang signal if you wanted to take that. Now we're trying to see if this market's going to shift the center of gravity a little bit. Another heavy pullback. Sellers couldn't get enough. Dumping stocks, probably near the bottom of something. I hope. We all hope. Don't want to see our portfolios get slaughtered here. Or is it 2008 again? I don't know yet. Once you're watching, if you're watching this recording and it's 3 months after this recording was made, then we'll know for sure what happened in history, right? Okay, so same thing, kind of a steep DTB as 3rd level sell-off. Prices crossing over dynamic trend band. That's one of the rules, but that is generally always going to be the case with the Cobra matching color and the dynamic trend band matching color. If these are matching colors, generally in 90% of the cases, these prices are going to be trading crossing over the dynamic trend band number 2. See, so it saved that previous rule for you boomerang owners of a few years back. The white line crossing the rim of the trade channel, or the white line, which is the rim of the fast line of the trade channel, crossing over dynamic trend band number 2. Because of my work in tightening those and creating the Cobra, you don't have to worry about that rule as much anymore because it's automatic. If the Cobra is green, this line changes. The prices are generally going to be crossed over with the same color candle, and all you have to do is what? That's right. For the best trade, look for the 3rd candle. Count 3 candles from here's the candle with the trade channel opening. Now, once this candle closes, it's going to lock that trade channel down. So you're looking for 1, 2, 3. On the 3rd one, there's a pullback signal line. Take it. It's going to be a better trade. They don't always work out that way, but your best bet is going to be if you can catch that within the third candle of the new trade channel opening. Here's an example, clearly crossover of matching dynamic trend bands. There is no trade here. Now I know that the Cobra changed colors, but the dynamic trend band number 1 didn't, and number 2 is also the bullish color. This is just a pure whipsaw here. Now again, if we go over here when it just started occurring, what you're seeing on the still chart here, green and green, all's green here. That doesn't mean necessarily you want to take another long, but notice and I got another chart I'll show you in a minute, notice how the prices are hovering right around the zero line of what I call the line in the sand, or otherwise known as the support resistant line here. When this changes to white, which is the bearish color, you'll know to watch for a new trade channel on the downside, which is opening up here. And again, the same rule, watch for the third candle. That'll save you in so many instances. Here's a new trade channel, candle 1, candle 2. Now, but however, remember, this is where you get expert boomer. It's very simple to use. Avoid fat trade channels that are created by 2 to 4 fast spike candles, one of which is usually 3 points or more. I do this all the time. The minute I see the prices hovering in a choppy form along here, and a lot of whipsaw, and notice blue dots, yellow dots, trade channel up, trade channel down, flipping, I just ignore it. Now I see 1 spike, 2, 3, I don't want that trade no matter what. I don't care if it works out. I don't want it, because even though it's within 3 candles of the new trade signal line, I mean the new trade channel opening, these spike candles are too much. It may work out, and it did, but you had to go through hell to get it, because in fact probably even got stopped out. Let's check. See, this spike move here just immediately refutes the boomerang trade. The boomerang entry on the sig line was here at 41.75. You see on the right here, over here, 41.75 plus 3 is 44.75. Well, it actually held the stop. You can see that technically this trade here did hold a 3-point stop, but I wouldn't have taken that trade myself. It missed it by 2 ticks. You're still in the trade, and they get hammered to the downside. So 41.75 went all the way down to 34.25. Huge downside slam. I'm going to keep the cursor on here for a minute, and I'm going to switch over to another chart to show you some other features of Ultra Boomerang. So I've just covered everything except choppy markets, which I'll go over in a minute here. Now again, this chart, this is today's action. It was a whipsaw hurricane, but you can still see trade channel, third candle, within 3 candles of the channel opening, down they go. No match on the Cobra. Cobra's blinking back and forth. No match here, no trade. Bias dots flipping, forget it. New trade channel within 3 candles of the pullback, matching colors on all 3 levels, down they go. Again, I gave it that trick I gave you with watching for the pullback signal line within the first 3 candles after the opening trade channel will save you in many cases. Again, crossing over here, steep dynamic trend band, but look at the spike candle coming off here, 28.5, 33, almost a 5-point spike candle. Forget it. Don't even get into it. New channel opening, forget it. It's spiking. It's going to create automatically right here a fat trade channel. You don't want it. I call them fat trade channels to create a negative kind of vibe. Not to say I got a little fat on me. We all do, I suppose, or some of us. It's not negative, but it creates a negative in the mind, like, oh, fat channel, forget it. It's kind of like you want to avoid it. That's why I use that term. I could say wide or this and that, but wide and fat means like you see the big belly on this thing here. Look at this. Here's a belly. See, those spike candles form this belly. So it's if you look, turn your head to the left, it's like a person who has a big beer belly or something. And again, nothing wrong with those, but it's just a way to look at the chart and see, oh, I don't want that. You don't want this trade here. See that? Why? Because spike candles formed it. Now, arguably, if you had presumed this was going to continue because things were really bearish, and maybe you're in my room and we were reading the high five up here, which is another thing I can tell you about later, or you can ask questions later. We can go over it after I finish this webinar, but there was a pullback signal line instantly here when the trade channel opened, and those are okay if you've got what? Matching Cobra, matching dynamic trend band number 1, or if number 2 is in a continuation mode, you can take those. Anyway, let me do this and bring in another chart. Now on this chart, what I've done here, this, you'll like this. I did this just to show you how really simple trading with Boomerang is. If we have all the configurations on here, there'll be a lot of lines here, and there's no problem with that. But you can see on my chart I use in the room, I removed the rim, outside rim of the trade channel and the white channel here. This one still does not have the white line on the fast rim of the trade channel, but I've added in, which is a new ultra feature, which is the coloring of what was formerly known as the red line. The red line is now the red and the green line because I've colored very meticulously, created the algorithm to color this line within the bias. You'll get an advanced warning in most cases, like here, of the Cobra alerting us to a sell, and you'll see the red line or the rim of the trade channel, the outer rim of the trade channel, also match color in the bias. Now this was one of those things too where the prices got a spike here. Forget it. Immediately it tells me, I don't think so. And then when you get the second one and third will follow real quick. You don't want that trade. You don't want that trade. Turn your head to the left. You'll see the beer belly sticking out here. You don't want that trade. That's a fat channel. Fat trade channel, forget it. It's going to create whipsaw and most likely a reversal. A lot of times when you get a fat channel, you can also think in your mind reversal. You don't reverse randomly. You just wait. It's an early warning sign for what? The next trade channel on the buy side. That's right. So look what happens. You get an advance warning with the Cobra changing color here. Prices, we no longer have the dynamic trend bands on here. Those are not on this chart. I'm just showing you something real simple. The prices jump up as they form a new trade channel. And what is the rule for the trade channel? Try to take the pullback to the signal line within 3 candles of the new trade channel. So it opens up. That candle locks down. There's the arrow because it's not going to blink on and off now because it's locked down. And you go 1, 2, boom, there it is. Pullback signal line, up they go. If this hadn't shown up for some reason, maybe it was a higher candle, trade number or third candle here, pulled back, take that one. Or if you miss this one, just happens to me sometimes too. It's just not fast enough. The market's moved too fast. I didn't catch it. Take the other one. It's still within 1, 2, 3 candles of the new trade channel opening and locking down. That'll generally save you on making wrong trades. In other words, if you get it, say these did not occur and this one occurs up here and it's 1, 2, 3, it's 6 channels. Wait, now the Boomerang Day Trader is going to mark the first 6 candles with a pullback to signal line. That's the advantage it has. But I'm just giving you an additional very helpful rule is look for the first 3 candles. So if this one had been the first one, I might have avoided that one. Certainly it panned out, but I might have avoided that one personally. So you see how that works? Also another way to check the bias is watch for the Cobra to cross over the new colored outside rim of the trade channel. Watch for that to cross over and match colors. They're going to cross over. When they cross over, they're going to match colors. But how simple is that to see? You're waiting merely for the crossover, watching for the third candle pullback within that. They cross over, and there you go. Now let's take an example of a continuation market that did a counter crossover. Well, you got a new trade channel opening on the downside, right? But you've got a green rim. This hangs very tight here. You got a green rim. You see this? You got a green rim of the previous buy channel. This has, even though a new channel is opened, notice how this rim, this because of the programming I did, It blinked red for a second on one candle, but it was right back to green again. It holds very tight. So this would not have been a pullback trade, even though, yes, the Cobra crossed here, but it was just blinking and mostly holding green. So you would have just avoided that trade. And what happened here? A new trade channel opens, crossover of the Cobra over the same color matching green rim of the trade channel. Trade channel signal, candle 1, candle 2, candle 3. So candle 1 actually hit the pullback signal line and market because the trade channel officially opened. You could have taken that, or just wait for number 2, 3, and well, this is the third candle here. You could have taken a risk and grabbed the fourth one. That's up to you, but generally, that's why the rule I say here, third, maybe fourth candle, if everything's still in a pretty tight configuration here. If you had spikes taken off, forget it. Here's another example here using this configuration, and we're almost done with our webinar here, and I will shut off the recorder, but you'll have all this information gathered carefully for you to observe. Same thing here, blinking colors. Now watch what happens when I put this configuration right over on the right edge of the chart. Okay, so here's that second huge run up. Some red candles coming in, counter channel here. This right away says to me, stand aside, forget it, take a break, whatever. When the channels start flipping and the dot colors start going red and blue, or yellow, blue, yellow, blue, yellow, yellow, blue, just forget it. Another tool that I've added to Boomerang Day Trader is these two lines here. The fast line is the dashed one, and the slower one is the solid one. When they're orange, it's a bullish configuration. When they're white, it's leaning on the bearish side. These are lines in the sand. When prices cross under these, it's a downside move. Above leans bullish, and then you just watch the colors to give you additional back of information. Well, notice how they were matching, both orange. New channel after the choppy period opens up, a new channel opens up. Continues choppy here. I'm trying to get a color change here. Now notice they did start to move up, but this was after a very extended move, so just common sense has said, whoa, 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 I don't know if I want to take a third level buy because it might be a little riskier, even though it may pan out. But all I'm saying is we're watching these two lines here right now. You with me? Now as prices move up, sure, that third level did take off, but you had some risk here because you had some counter channels and all that. Choppy period here. You can use prices, the idea of prices, the support resistance lines tightly holding together with prices trading right around them. That's another sign. And to get the shift, I get this question a lot, and that's why I added this feature. When do we know the choppiness is going to end? Well, now you have these two lines here, which are known as the support resistance lines, dynamic support resistance, to guide you. So they're still orange, so prices are pushing higher. They're still orange here. Prices are pushing higher. You know, you've got a really extended move up here. I would have probably been working an exhaustion reversal up here, but those are exclusive to the room. It took me many, many years to learn how to do those and get them right. It's very risky, but I do them in the room all the time. But now look, I just want to show you this. I'm going to go down here and click tick by tick. Notice the orange lines exhausting up here. Prices are still kind of hovering around these lines. Again, these are like what I call line in the sand, you know, like cross that line and that's it, you know. Changes the game. Now watch when I go candle by candle here. New sell channel coming in. Notice how simultaneously both lines turn white. Usually you get this white thin line here. It's an advanced line going white. Then they both turn white as prices spiked lower. Now they're under the support resistance, and the odds favor that the choppiness is over. Here's your first pullback to the signal line. Cobra is turning red. The rim of the trade channel is turning red at the same time. You'd have had to have your chart. I've got it scrunched here, so let's see what it looks like if I hit on this here. You would have had new trade channel, Cobra, matching, and the white line changed one or two candles before. And again, open trade channel, pull back to the 1, 2. You would have probably been able to catch this. Maybe not, but you don't want this one. Why? Because after the trade channel open, the huge bias shift, spike candle to downside. If you didn't catch this one, probably forget it. And the other reason, 1, 2, 3 candles away. Now again, the fourth 1, 2, 3, fourth, fifth candle hit the signal line, but look at what happened. It did sell off. 57.5 went down to 54.5 for exactly 3 points. However, you had to pay for it. There was some choppiness in there, and the reason is that good old rule that's on here, very simple rule. Do not trade against a steep dynamic trend band. Oh, sorry, wrong rule. Avoid the fat trade channels that are created by 2 to 4 fast spike candles, one of which is usually 3 points or more. You just automatically condition yourself. When you see a spike candle like this, you go, whoa, whoa, whoa. You just back off. Here's a second one. You don't want this. Now you're 3 candles away from the trade signal line or the trade channel opening. That's okay. Next. You've already made a bunch of winning trades. So that's how you use these dynamic support resistance lines, and another method or way of double confirmation of taking a trade signal line using the 3 candle method after the trade channel and the matching Cobra and rim of the trade channel. So I hope that was clear for you. Now, one thing I haven't discussed yet, which I will right now, and I mentioned that in here, just so you know, avoid choppy market conditions by reading the volume meter with ADX, which is developed by the brilliant Wells Wilder. It's a force measurement of a trend. And with counter-colored candles, trade channels flipping back and forth. We already went through that on this choppiness period here. Did you remember that just a few minutes ago? I hope you did. Working hard here to make sure you learn how to do this. Choppiness period candles using the support resistance lines, flipping channels, flipping dot colors back and forth. Just stand aside. Forget it. A little bit more here. Up they go. And then right in here, we're using the bias change here. Now this won't apply to this particular trade, but this is called this is a volume meter. All you're doing with the volume meter is making sure the volume is sufficiently strong to support your trade. This is the ADX here, and without getting into this, you can just come into my room and I can teach you about the volume meter more, but the best way to learn about it, which I explain in crystal clear detail, is right here on our blog. Just go to the boomerangtrader.com. It's my blog where it's kind of a resource go-to for everything. You can join for updates and everything like that, but go to resources. Here's some information on the Precision Trade Guide, by the way, which you get for free as a gift if you buy Boomerang today or tomorrow. It's only $11.95. Here's an explanation of the components. However, this was done prior to Ultra, so that may be a little bit different. Bias Index 1, this is a good one. But here's what I want to refer you to. How to set up the volume meter. You need to know where the volume is. It's just like buying a Ferrari, and you're so excited driving around your Ferrari, you forget to check the gas tank meter. You know, full, empty, half full. and you're driving and you go, oh, it starts sputtering and spinning. You go, oh man, I got this new car. Damn, why is it not working right? Look at the gas meter. You're out of gas. So similarly, the volume meter is like the gas meter on a car. You got to have gas. You got to have fuel, which is volume, to run that machine, that Boomerang machine, Boomerang Day Trader Ultra machine here. So again, this explains how we use the ADX. Very, very simple. And it just tells you when there's strength in the trend. And you combine that with simply looking at the VALMA, or the volume moving average, to determine, that's this line here. You know, if they're above the pink line, you're okay. The magenta line, if you're below the blue line, then probably the volume is starting to wane a little. You just keep an eye on this. This is how to do it. So it tells you exactly how to do in there. It's the only thing you need. You got to have a volume meter. If you're not watching the volume while you trade, you're in a clueless state. And no offense, I was there before too. But once you get it, you realize that it's very important. You can set these up on any, you can set up on a Ninja chart like we use here. You can set up on any chart. If you have a data vendor, with charting, then it's just look for the volume moving average. That's all that is here. Volume moving average. ADX is a common measurement. You can always find that in the other vendors for data vendors. And this is a singular volume. This is each volume per candle. NASDAQ 1 minute. It's based on a 1 minute chart. And again, what I just showed you will explain everything in great detail. Exactly. It's very simple to make. It takes 10 minutes to build it. And that'll show you step by step how to do it. So with that in mind, we are pretty much, that covers everything here. Those are the methods for trading with Boomerang Day Trader. And let me just review this once more. And if you want a copy of this PDF, I got to add some chart samples, and then I'll have it ready. I can send it out to you. The bottom line is we take trades in a new trade channel only. This is where we take trades. We take trades in a new trade channel on a pullback signal line. That's always how the trade is going to be set up. To determine when we want to do that is we do that with matching colors on the Cobra and the dynamic trend bands. Again, this is just a general statement, and that I went into detail on this webinar for. Matching colors on the Cobra and dynamic trend band number 1 in relation to prices crossing over dynamic trend band number 2, which will normally be the case when you have Cobra and dynamic trend band number 1 matching. Practically every time you're going to have prices on that side of, see how they're matching here? The prices are almost always going to be on that side of the dynamic trend band number 2. This was part of the enhanced feature that I did to just simplify trading with Boomerang. When all 3 colors match, you can often, if it happens, it's usually a big move, but when all 3 match, look for pullbacks to the Cobra line. Those are harder trades to take and riskier. I don't have it in the rules because all I'm trying to do is get you to learn to trade the very simple core method. After a while, I'm giving you the information so you can do it, but when you get a crossover, look for a pullback if you can to the Cobra line. Try to get it. Sometimes, like today, they didn't even let it happen in this trade. Avoid the fat trade channels, which are created always by 2 to 4 fast spike candles. One of those candles is usually 3 points or more. And avoid choppy market conditions by using the volume meter, understanding a little bit about, volume was trading 300, 400 average 4-period contracts, and it dropped down to 120. Yikes. That's going to be a choppy market, practically guaranteed. You can see like right here, for example, see how low the volume is, the 4-period average, 44.49. Over here, when the market was coming in the close, they're trading 2,000 contracts plus. And that's just because of all the hype going on right now. But Notice how when the market closed, well, I screwed this up here. Oh, still good. Okay. When the market closed, I'm just showing you. Notice how the volume drops down under this green line and under the magenta line. So all I'm saying is that intraday you can see this same thing happening, and it's just telling you, forget it. With this average way down here, just stand aside. Learn how to use the ADX. You'll be in great shape. So that's the essence of trading with Boomerang, with the new enhanced Ultra features, which makes it even easier to trade. So with that in mind, I really appreciate you joining with me on this tutorial today for that, and we're going to end this session right here now.